Welcome, guys. Today is July the 3rd, 2019. Wanted to talk about a gold trade that set up earlier today. Actually, it was pretty much overnight, but I want to talk about this early morning today. But I want to talk about it because this ended up being a really nice CRT based off the 30-minute or the 1 hour time frame, and it was an H4 structure trade. If you have taken the course, you understand exactly what I'm talking about here, but these are the highest probability trade setups that you can take. And once again, this worked out very, very nicely. Anywhere from a 2-to-1 to a 4-to-1, depending on how you place your stops. But turned out really, really good. The first thing I want to draw your attention to is this level right up in here. Right around here is the level I would look to take a short. First of all, this is the all-time high on gold. Going back to, if you look at your chart here, you can't see it very well. Well, you probably can't see it at all, but my chart says June 25th, 2019. This is the all-time high from June 29th. You can see we dropped, we pulled back, couldn't make a brand new high, and then we had another push down right here. So we have one leg down, pull back, two legs down, and then we saw price go all the way back up to the all-time high without a retracement. That is the key in these structured trades. Two levels and then no retracement back to the top. That makes for a very, very difficult level to break, especially if you have max moves on the 30-minute or the 1 hour, which we did. So again, this is a setup right here. You would look to short right around 1432 to 1438 is your short zone, and then you would hope for a drop. Obviously, if it went beyond that, you would have your stops in place and you wouldn't suffer from a big loss. But this is the short. If you go down to the 1 hour time frame, you can see it here. This is the CRT view right here. You can see we are at a max move, and if you're like, what the heck is a max move? If you get my trading course, you will absolutely understand what a max move is because it's one of the key components in the CRT setup. But you have a max move on the 1 hour, and you also have it on the 30-minute time frame. So you can trade this as a CRT based off of the 30-minute or the 1 hour time frame. The difference between the two is the 30-minute time frame is going to offer you a tighter stop, which means your risk to reward is going to be better. So you can trade it off the 1 hour if you really desire to. If you like slightly bigger stops, then you can trade it off the 1 hour time frame. If you like tighter stops, 30-minute time frame. Either way, I mean, if it's going to work, it's going to work. So you might as well go for the lower time frame here. But you can see we're at a max move right here on the 1 hour time frame. If you take it off the 1 hour time frame, your stop loss is probably going to be around 10 to 15 bucks. If you take it off the 30-minute time frame, you're looking at 5 to 7. So you can see your stop loss is much tighter on the based off the 30-minute time frame. But you can see the all-time highs over here. This is where you would look to get into it, and you can see we fell right back down to the major moving average, right around 14.15, which is where I would take off a very good portion of my profits on this in most cases, especially with tomorrow being July 4th holiday. You never know what could happen there, and the market's being closed. So, well, the equity market's being closed. So, but again, this is an H4. Again, you have one leg down, pull back, a second leg down, and then you had all of these buyers here trying to push prices through the top. Obviously, there's a boatload of sellers up here, and they are not going to allow that to happen. So what you want to see is a max move on the H1 or 30-minute. Obviously, if it's an all-time high, it's going to be an isolated level on both the 30-minute and the 1 hour, which is essential in understanding. Otherwise, you're going to get yourself into some trades that are not going to work out too well. But 30-minute, and you have the required move off of the 30-minute. The 1 hour is really very borderline. So again, like I said before, the 30-minute is really the better of the two to take a day trade off of. Again, I don't day trade a lot. I do mostly swing trading based off the H4 and higher time frames. But every now and then you'll get a beautiful little trade setting up on the lower time frames like this. And it worked out very well. And you can see that, again, this thing dropped about, we went from 14, actually the actual high right up here was 1437. All the way down here to 14.11. So about a $26 move. Again, with a $5 to $7 stop loss up there, you're making a whole lot of money. So, and who knows, this could be setting up to make another leg down. But again, like I said, July 4th holiday, and I would not be looking to hold during that time frame. Just not what I do. But I wanted to show you this again. Structured trade setup based off of the H4, no pullback straight to the top, and then the 1 hour or the 30 minute. You can see that we have a massive top up here. You have, in fact, if you look at the 30 minutes, there's a section of the course that I talk about called exhaustion, and this was an exhaustion move, and it was also a structure move, and it was a max move, and it was an isolated level. So you literally had every possible thing telling you this level was going to work. Like I said, this is a 90% trade setup if you can find them. So I just got to keep your eyes open, got to be patient. But when these show up, guess what? All you got to do is ring the register. So, but have a great Independence Day, everybody, and we'll see you in the next video.